Sam Bankman-Fried. Sam Bankman-Fried built FTX into one of crypto's largest exchanges, attracting celebrity endorsements and congressional testimony as the industry's so-called responsible face. But in November 2022, the facade collapsed. It emerged that FTX had been secretly funneling customer funds to Alameda Research, his own trading firm, to cover losses and risky bets. The implosion was swift and total. Roughly $8 billion in customer funds vanished almost overnight. Bankman Fried was arrested in the Bahamas, extradited to the US, and convicted on 7 counts of fraud and conspiracy. He was sentenced to 25 years in prison. The scandal didn't just destroy FTX, it shook confidence across the entire crypto industry, exposing how little oversight existed beneath the surface of even its most prominent players. Kwon built Terra USD, an algorithmic stablecoin meant to hold its dollar value without being backed by real assets. He was loud, confident, and openly mocked anyone who questioned whether it would hold. Thousands of ordinary investors trusted him, treating Luna as a savings vehicle. Critics warned the system was fragile. Kwon dismissed them, but the math only worked in one direction, and in May 2022, it stopped working entirely. The peg broke. Terra USD lost its dollar value. Luna collapsed to near zero. An estimated $40 billion in market value was erased in less than a week. People who had parked their savings in Luna lost everything. Not most of it, all of it. Kwon fled, moving through multiple countries before being arrested in Montenegro. He now faces fraud charges in both South Korea and the United States, and has fought extradition for years. He called his critics poor, then he ran. Mashinsky, the founder and CEO of Celsius Network, told the world Celsius Network was safer than a bank. Hundreds of thousands of people believed him depositing their life savings, retirement funds, and college money into his platform. He promised high yield, security, and a revolution in personal finance. Behind the scenes, Celsius was gambling with customer deposits, risky bets, volatile assets, and when things went wrong, new deposits were used to cover old losses. Mashinsky knew, and while he publicly urged customers to keep their crypto on the platform, he was quietly selling his own. In June 2022, withdrawals were frozen without warning. No phone call, no explanation, just silence. Celsius filed for bankruptcy weeks later. Customers became unsecured creditors last in line, recovering pennies or nothing. In 2023, Mashinsky was arrested on federal fraud and market manipulation charges. He had built an empire on trust while betraying every person who gave it to him. Changpeng Zhao, known as CZ, built Binance into the largest crypto exchange in the world. Millions of people traded on it daily. But while the platform grew, it operated in the shadows, moving between jurisdictions, dodging regulators, and resisting the compliance requirements every legitimate financial institution has to follow. For years, it worked. Binance was too big, too fast, and too global to pin down. But the US Department of Justice was watching. Investigators alleged the platform had processed billions in transactions for sanctioned entities and criminal networks, and that CZ knew. In 2023, it caught up with him. Zhao pleaded guilty to violating anti-money laundering laws and stepped down as CEO. He personally paid a $50 million fine. Binance paid over $4 billion in penalties, one of the largest corporate settlements in financial history. The world's biggest crypto exchange had been built in part on the freedom to look the other way. Ignatova called herself the crypto queen. Her project, OneCoin, was pitched at lavish global events as the next Bitcoin, and she was magnetic enough that millions of people across dozens of countries believed her. They handed over their money for a coin that, investigators later confirmed, had no real blockchain behind it at all. OneCoin was never a cryptocurrency. It was a pyramid scheme dressed in technical language, designed to sound legitimate just long enough to keep the money flowing in, and it worked for years. An estimated $4 billion was taken from investors worldwide. In 2017, as authorities closed in, Ignatova boarded a flight from Sofia. She never came back. Her brother was eventually convicted and cooperated with investigators. She has not been found. No arrest, no trial, no accountability. She remains one of the most wanted fugitives in the world, and somewhere out there, the crypto queen is still free. Gerald Cotten founded Quadriga CX, Canada's largest crypto exchange. Customers trusted him with their money, and he was the only person who knew where it was. Every dollar, every coin, locked behind private keys that only he controlled. No backup, no contingency, just him. In December 2018, Cotten died unexpectedly in India. The exchange announced that $190 million in customer funds were now inaccessible. No one else had the keys. But as investigators dug deeper, a darker truth emerged. Much of the money had already been gone long before he died. Cotten had apparently been using customer deposits to fund personal spending and cover trading losses for years. Because he was dead, no charges could be filed. Customers got nothing. And then the question started about the death itself, whether it was real, whether it had been staged. No evidence has confirmed that, but no one has been able to fully rule it out either. Gerald Cotten may have been a fraudster who got away with everything. Nathaniel Chastain. Nathaniel Chastain was a product manager at OpenSea, the largest NFT marketplace in the world. At the peak of the NFT boom, his role gave him advanced knowledge of which NFTs would be featured on the platform's homepage, a position that directly influenced prices, since featured items typically surged in value. Chastain secretly bought those NFTs before they were listed and then sold them after their prices rose. It was a straightforward insider trading scheme applied to a new asset class. He was arrested in 2022 and became the first person ever convicted of insider trading involving NFTs. The case was notable not just for the conviction, but for what it said about how traditional financial crime had followed crypto into every new corner of the market. Bitconnect. There was no single founder who became the face of this scheme in the same way, but the platform itself became one of the most infamous frauds in crypto history. Bitconnect launched in 2016 and promised investors extraordinary daily returns through a trading bot that, the company claimed, could generate consistent profits regardless of market conditions. Investors locked up their Bitcoin and received Bitconnect tokens in return, along with promises of returns that sometimes exceeded 300% annually. Regulators in the United States and United Kingdom issued warnings. In early 2018, the platform shut down almost overnight. The token's value collapsed by over 90% in 24 hours. Hundreds of millions of dollars were lost. Promoters were later charged and convicted in the United States,